So, good evening, everybody. Thanks for joining. It's our pleasure to welcome Mr. Wietlisbach in today's event. We are very honored to have him here, and the structure of the event is going to be that we're going to do a guided Q&A session from our side for around 40 minutes, and then we're going to open the floor to you for around 20 to 30 minutes to ask any questions that you might have. So feel free to come up with any questions throughout the talk. I'm going to hand it over to Alina, who's going to give you an introduction to Mr. Wietlisbach resume.
So, Mr. Urs Wietlisbach started his career mostly on the corporate finance side, working at Credit Suisse. He later joined Goldman Sachs, where he met Marcel and Freddie, with whom he later founded Partners Group in 1996. Partners Group is a leading global private markets firm that have invested over 185 billion US dollars in private equity, infrastructure, real estate, and debt. Urs Wietlisbach also founded Blue Earth Capital in 2015, which is mostly focusing on impact investing for institutional clients.
Yes, great. Thank you, Alina. And I think we can jump straight away into the Q&A. Sort of building on what we just said, Freddie and Marcel, your co-founders, they approached you when you were still at Goldman. So we were wondering, what made you believe that it was the right time and the right decision to leave? And maybe more broadly, how should students or people in this room in the future evaluate similar decisions where they have to choose between staying at an established institution, a safe job, versus leaving for a more entrepreneurial career?
Yeah, I mean, maybe to elaborate a little bit how it all happened. So I was at Goldman running the institutional sales desk, a generalistic institutional sales desk, which I tried to convince the big boss in New York that we get on commissions, because in institutional sales you get salary plus bonus. If the firm has a bad year like this year, I guess, not such a good year, then your bonus is small. Private clients were on commissions, didn't matter what the firm does. You had a percentage of your commission, so it was almost like your own business. And I convinced the senior guy, because I did generalistic sales on this desk, that we get on commissions. And actually, I was over in New York. Big boss said, "You're on commission from the new year on." I'm coming back, tell Freddie, who worked for me on the desk, that yes, we have our own business. It's now on commissions, and he says, "I want to have a coffee with you," and said, "I'm going to start my own business together with Marcel." They were together in the associate program. I didn't know Marcel very well, or not at all, actually. And then Freddie said it would be great if you would join as well. Like, guys, are you crazy? I mean, we are now at Goldman, which at this time was like the Olymp when you were in banking. That was the best you can be. And we were on commissions. So as I was the highest paid of the three of us, the oldest, I had a kind of a way half in. So I said it doesn't make sense that three guys sit in Zug in a small office and have nothing to do. I then said my savings were exactly 200,000 on the bank by then, and so we agreed that I put in 200,000 and I had to join in 18 months from then to be equal partner with the two others. And that's how it all started. So the two of them started, I paid this 200,000 in, and then joined. I had it was a little bit easier because I saw what we are already doing after 8-9 months later I joined then. Your second question, what would I recommend? I usually recommend to go to larger organizations after the studies to further fill up your backpack. There try to be, also if you intend to be once independent, have your own firm, then try to be as broad as possible in filling up your backpack. Ask lots of questions. So I did like a Credit Suisse, the corporate banking side. I knew almost, they sent me to New York as well, and I spent some time there with Forex, bullions, trade finance, name it, all the credit, corporate finance. I knew about all of at least a little bit how it works. And then at Goldman, I had the other side, the buy side. So I was on the selling side, the whole range as well. I was a generalist. And which I think is great if you start something later on, because you never know where you're ending up when you start something. Because we didn't start to do private equity. Maybe another question. So I recommend to go, but then don't get too comfortable. Have the courage to leave. I mean, you think when we left, it was just crazy. You know, my father said, "You're completely insane. You're now at Goldman. You're on commissions. It's almost like your own business." But that's what we did.
So, Partners Group went public in 2006, only 10 years after it was founded. What made you believe that this was the right decision to make, and did it prove to be an enabler to the firm's development?
The thing is, you need to understand why we went public. So we have 3 young guys, Goldman, not much. Yeah, what did we had? Nothing, actually. So we wanted to do asset management for entrepreneurs. Like everybody in Switzerland has asset management firms, independent asset management. Our big credo was all the kickbacks, which at this time were still allowed from all the fund managers and all the banks, we're going to give it back to the client. That was our big USP. And we go and find old bankers, which we lure to us, and we do then the whole asset management. But then it developed with, we sold some companies. Marcel did a little bit M&A. At the beginning, you do whatever comes along. We sold 3 companies in 1 year, all in advertising. And these guys loved us because we sold these companies at more than one was at 3 million, one 15, one I think 28 or 30, all higher than they were expecting. So they gave us their money to invest, and then they said, I mean, just stocks and bonds, that's boring. We are entrepreneurs, we like, and that's how we partially went into private equity. And then we needed employees, others, and the first 150 somewhat senior people that we hired at Partners Group over the years, there was always one credo. You know, they were not entrepreneurs. They came into a company who was already in existence, but that they were half entrepreneurs, because we told all of these people, you come at least 30% lower salary that you had before. They came from Goldman, they had 70% lower salary. So everybody had to come. So we had the first 3 partners after us, we called them B partners. One was very high at Swiss Bank Corporation in Lucerne. One was running actually the whole UBS in Southeast Asia out of Singapore. One was the second in command at Bank Hofmann, and before head of Credit Suisse Asset Management in Frankfurt. So kind of pretty high. All of them were also older than we were. and they all had to come with, at the beginning we paid 120,000 Swiss franc per year. That was where they had to come from. But we always told them, here, have a few shares. The earlier joiners had a little bit more shares, and the later joiners, the bigger the firm was, they got little shares. But all of them got 1%, 1.5%, 2.5%. So we shared from our 100%. We gave always a little bit back. And they had to believe that the firm is going to be worth something big in the future. They had 5-year cliff vesting. So in these 5 years, if we fired them or let them go after 3 years, they have worked for much lower salary for 3 years and had to give the shares back. And 2-year non-compete, so quite a long period. And you could tell the guys or girls who didn't take, said, no, I need still at least the same salary than before, then okay, you're not made for us. Stay where you are. So you got at least entrepreneurial thinking people. And then more or less everybody had shares. Even our receptionist, we gave her a little bit shares just for the fun of it, and so that she feels, yeah. And then the people were always asking, yeah, what are these shares worth, right? There was a nice way to keep these people as well, and after a while we got to be a name, and people got hired away, and then we thought, like, if you go public, we know what they lose when they leave. There was a second reason. By then we started to go much more into direct investing. Before we did fund of fund secondaries as well. We did much more direct. And when you do direct, the investors expect, the pension plans and so on, they expect that you invest alongside. As we never paid out really high salaries, our net worth was not, our net worth were the shares. And so we needed to cash in part of it, that we said that the majority that we cashed in, we have been investing alongside the firm afterwards. That was the second reason. The third reason was, especially in Asia, being public gave you a complete different level, talking level. So there were, I would say, the three main reasons that we went public. It didn't change much for the firm at the beginning, because we always said we are a private partnership with a public listing. We told our employees and ourselves as well, don't watch the share price. Who cares? We are here for the long term. We anyway had long lockup, so who cares what the share price does? We were not doing quarterly reporting. We said that's for others. We do half year. That's enough. We had to do half year. I think we want to do yearly, but we had to do half year. So we were really, we were a public firm, but the majority at the beginning was still 60% was in the hands of all employees. I mean, today, over time, everybody has sold down. Today, it's much more a public firm.
And in your committee meeting room, there is a banner which says, "We're responsible for dreams." So could you explain what it means, what it stands for, and maybe you could share with us how does a typical committee meeting look like?
Yeah, for us, it's important that our people, our investment professionals, that they know why they actually work. It's not for the share price, it's partially for the carry, which they have part of it. But at the heart of it is they work for pensioners. So because the majority of the money that we get is from pension plans, and they need to realize if they fuck up, sorry for the word, then they take away the dreams of our pensioners. We are a substantial part of returns of pension plans. Our biggest mandate we have is Q Super, the pension plan of Queensland. It's a $6.5 billion mandate. I just had the goodbye dinner with the former CIO, who at the beginning hated private equity 10 years ago, before I convinced him to do with me, and he was saying, like, I want to thank you also, not from my side, from all the pensioners. We are 40% of their return. We are 4.5% of the assets. We are 40% of the return of this fund the last 10 years, with 5% assets. This is also doing extremely well. It's partially luck. It's one of our best running programs. But we want that our employees know that they are here for the normal workers who have worked their whole life and look for a decent pension. And if we do the right returns, then the pension is gonna be bigger. So that's the main reason. And everybody, we always show some films as well. We even go out to pension plans people. Literally, we go there and film them and ask them about their dreams. You're going to pension in 5 years. Yeah, I'm looking forward to hopefully be able to buy a homemobile, or I'm looking for this and this. And we show it to our employees. If you don't perform, they're another. So that's the whole thinking. And but we are also believe. Also, that's really. It's not just the blah blah. We really believe in this. And so, investment committees are usually, they start always we have a decision room. It's like a V shape. So the senior investment professionals sit here, and then you have a big video screens, 4 or 5 of them. So the different officers are then on there with their transactions. It starts at around 2 o'clock, sometimes goes into midnight. And deals are developed over time. So you start with a teaser. When we look at a company, we have a teaser maybe many times long before the company is even up for sale. This is proactive research that we do. So we decide, yeah, we like this space. There could be something. It could be a great buy or build strategy, and so on. And so you have a teaser. Then they start to work on it. They come back with the first findings. Then you can do something which is called the first check. That's maybe 8, 9, 12 pages of. And each time it's discussed, should we really go along, because from a first check then really costs are occurred, because when you start to do then deeper due diligence, goes into the millions of external costs. So you hire consultants, you look at this and this and this, and if the deal never comes, or if we then finally decide it's not for us, or today that the deal is too expensive at the end, we lose out on it, we have another specific angle that we could win the transaction, you incur a lot of costs. And then you do a peer, that's then already such a thick document, can be as thick, with all the information. And then there you decide, now we go in with this and this bid, and hopefully we win it. And then you do the final closing things, that's then called IR, but that's the way. And that can take a year time, 1.5 years time. But this is, most of this over a year time is, this company is not even up for sale yet. We hope that sooner or later a bank, an intermediary, an M&A boutique comes and says, so, this company is now for sale. We kind of know what might be for sale sooner or later once. And then these are the proactive private equity firms who do all this work ahead. The reactive, which is still about 2/3 of our industry. Then the bank book comes. Then you today have 4 to 6 weeks time, not longer, to come with your final bid. I don't know how the others are doing the due diligence in 4 or 6 weeks. We have been working since a year or longer on the transactions by then.
So what aspect of working in Partners Group do you enjoy the most? So what is kind of like your favorite thing about your work?
Yeah, for me, I'm from the 3 founders, I'm responsible for client relationships. So I'm the guy who gets the money in. Also I don't have clients anymore. We have about 100 and whatever, 20 people in the marketing team or even more. But I enjoy still to see clients, convince clients that they should give us money. I was last week in Singapore, Tokyo, seeing distribution partners. Partners Group is very strong in the so-called evergreen, open-ended private equity structures, which high net worths can invest in. There we are the largest worldwide, with 38 billion. There we always go through distribution partners. There I like to meet these Novuras, these UBSs, and present in front of management, or when we have to convince them that they should take us new on, and when we are on, then you have to go and present in front of all the private bankers and so on. When I was here, I did the student theater, which I guess is not around. I love to stand in front of people and talk. It's what I can do best, I guess. So I still enjoy. But today I have many other things that I do. It's just one part of Partners Group. Yeah.
And maybe a bit more broadly, looking at some of the people that you have surrounded yourself with throughout your career, what were the distinguishing factors of the best investors in your team? So what do you think makes a great investor?
Yeah, you don't have a single great investor as another Partners Group. You have kind of, I think, 2 types of private equity firms. We are a star team, and you have others. I don't know, CVC as an example. They are a team of stars. So you eat what you kill. You are a deal maker. You don't do anything. You don't look right and left, and that's it. A Partners Group, it's a system. It's a well thought through system. This thematic research, this whole teams, and they work together and they work close together, and it's a team effort. amongst the teams that build the transaction. We also we share the carry with the different teams, so our private debt team gets part of the carry of the direct equity team. The real estate team gets a little bit of private, because sometimes a private equity deal has a real estate angle, a lot of real estate in the company, so you do a sale leaseback and all of the things. So we build up the whole. It's a knowledge, and our team members is also only about, I would say, in the meantime, about 40% are really people with financial background. All the rest are coming out of industries. So we hire people out of the consumer industry. We hire our new head private equity worldwide is the former CEO of ZF, this very big German company out in Friedrichshafen. I think not many people know it because they are not public, but it's one of the biggest automotive, mainly in the automotive industry. They have about 250,000 employees. So the CEO of this company is now joining Partners Group to be head of our private equity team. So you see, we have people out of the industry. He has now 220 people reporting to him or under him. But through all these people, through these over 100 companies that we own, there are again 250,000 or more employees. Yeah.
So now moving on to Blue Earth Capital, you co-founded it in 2015. Could you share with us the motivation behind it?
Yeah, a while ago I decided that after the IPO and so on, its stock price only had one way until recently, but it's going there again, I hope. But it's one way, and I got pretty wealthy. And I have said, that doesn't make sense to billionaire it makes sense, but it doesn't make sense to inherit this the whole time. I mean, why should my two sons get all this money? Even if they get 10% of it, it's plenty to build their own career. If they want to lay back, it's enough to live. If they want to create something, it's enough to start a company. And so I have decided to give this away together with my wife in our foundation, Urs Wietlisbach Foundation. So the foundation has different charities that we think about. I'm more on education, young people, sports. My wife is more on alternative healthcare and so on. But then I ask myself, as I'm an investor anyway, I ask myself, why should I have the asset side of the foundation? Foundation has an asset side where you have all the assets. And normally foundations invest in the SMI or whatever they invest in, bonds or whatever. And then out of the income, they do the charity and so on. And then I said, yeah, but the asset side could also be impactful. I'm giving it anyway away. So why don't I invest this? And I came to this back in 2012, 13. The head of ESG at Partners Group, he showed me a so-called solar note. Okay, have you a good investment? It's a solar note. And I was like, what's this? He said, yeah, it's this non-profit company, Sunny Money in London. What they do is they sell lamps to the poorest of the poorest in Africa. It doesn't make sense that where the sun shines most, that they don't use electricity or solar, right? So in their huts, they still have these kerosene lamps. It's really bad, the fume, it has bad, not even good lights. And so my first thing was, I have here my foundation. Why don't we buy few 100,000 of these lamps and give it out? And I said, if you give them out, this thing is broken in a week or two. If you give it as a present, it's kind of, what is it? And if they have to buy it with their very little salary, and the whole concept behind this is if the money they spend for kerosene, after about 10 to 12 months, the lamp is paid back. So they don't need kerosene anymore. Instead of buying kerosene, they pay back, and then this lamp is actually still in my office now for almost 10 years later. It still works, so this is a good product. And so he said that's how Sunny Money does it. You have to pre-finance, you know, you have to first to buy these lamps, and then you sell it to them, and then and for this they needed debt. And then he said, so you could do here 200,000 or whatever it was, and it gives you for 3 years, and it gives you 7% return per year. And then in my head, I had my charity side. I'm doing it from the foundation. So I asked him, what's the probability that I get this money back? And he said it's 95, 97%. So suddenly from charity goes over to, oh, this is a good investment. I give money, I get money back, and I get 7%. So that's how it all started. Then I realized you can actually make money by doing good on this case. So that was my first impact investing. And then I wanted to do impact then I thought, like, why don't I start to read about impact investing? So 10 years ago there were not many impact investing funds, definitely not institutionalized. Many impact funds back then were like 2-3 persons want to do good but had no clue about investing, just had the impact in their head but not the investment side, and you need both. And then I approached Partners Group and said, shouldn't we do this? It's going to be sooner or later anyway something that people want to do. And then Partners Group said, that's not for us because we are a public firm. We have a high EBITDA margin. In impact, you do 5 million here, 8 million there. We usually do 100 million, 300 here, 500 million there. It's not, and you need the same amount of people and due diligence. So, but then Partners Group said, let's do this as a sister company. So we started it as PG Impact. We could use all the templates of Partners Group. We could use the offices. And I just started this, and I didn't want to own it again, an asset manager. So we have a foundation, Blue Earth Capital Foundation, owns the Blue Earth Capital asset management firm. That's a normal impact investment firm. We are now 900 and something million on the management. 41 people around the world, and I'm one of the big investors in all of our funds. So my foundation invests in each of the funds. We have a global impact fund, a general impact fund. We have a global debt impact fund. We have a climate growth fund, and so different funds with investment professionals. And the whole asset side of my foundation is only impact investing, which makes sense. And it works. The returns are good. The global fund is today at 10.8% net return. The impact debt, we have 8.7% net return. Year to date up, both of them. One 9.5%, the other one 2.5%. So it's a good diversificator because these people are not affected by this FTX blow up or Nasdaq down 40%. These people, there are other risks in impact investing in emerging markets. It's more like currency risk and political risk, but they pay back, they pay you, and it works.
Do you have a single favorite investment that you've done while at Blue Earth?
Yeah, the one I mentioned already, the first one is always the best, I guess. Because that's one, maybe another one which I really like the concept is a company called ShareDex. It was founded by a venture capitalist out of Silicon Valley. What ShareDex is doing is they go in Peru, Guatemala, all these regions, they go to the poor rural areas and they go and buy big farms. It's similar in Latin America that the rich guys from the city, they own somewhere a farm as some richer Swiss, they love to have a little winery in the Toscana or a winery in the Bordeaux. They do this more as fun than just making money with it. Similar there. So what this company ShareX does is they go and approach them and tell them, I would like to buy this farm. These farms are usually not very well run because he has it more as for fun. And then they send down Western agronomical specialists, and then we make money out of these farms. That's not yet impact, but these farms makes them money. And then you invite all the small farmers around these big farms. And those are really poorest of the poorest farmer with a very small little pot of land, and they have no clue. Since 100 years they do the same thing and not very efficient. And then you invite these farmers to the big farm and you train them. And it's so astonishing. The output for the single farmers is between the lowest which has been happening was 4.5 times. The best was 7 times more output of their pot of land. If you have 5, 6 times more output, you are from poor, lower middle class. And that's really fascinating. So this company in the meantime makes about 30 million EBITDA because we bought many of these farms and we have touched, what is it now, 18,000 or 20,000 small farmers with their whole family, which are taken out of poverty to lower middle income. Pretty fascinating, and the concept works, and they do it in more and more countries. And our investment is now already at about 2.5 times multiple. So we make money out of the big farms, and yeah.
So what are the opportunities that you're spending a lot of time on at the moment, and how have they evolved over the past 2 years?
Yeah, I would say opportunities. If people always ask me what I'm doing, I can tell you what my life is kind of, what I spend time on. So 50% is still Partners Group. That's our board meetings. I'm head of the clients. I'm from the board, the head of clients. So we have a clients oversight committee which meets every 6 weeks, where we then with the management see what we are doing on the client side. Then I'm going and see clients. Yeah, our own board meetings and so on, some strategic meetings. That's what I do for Partners. It's about 50% of my time. Then 10% is Blue Earth Capital. I'm more the mentor there, making sure maybe have full-fledged. I'm the chairman of this, but the rest, they do it. And then I started, now 10 years ago. Tomorrow is the 10-year party of this company, Property One. That's a real estate company, real estate developing, real estate sales in Switzerland, because I always said I want to have 10% of my net worth I want to have in Swiss real estate, because that's in my view the safest thing you can have. So there I spent some time. This company started with 4 people. They are now 50, 60 people. Have a pretty big portfolio built up. I'm one of their clients and owner. So I do this, then what else do I do? Oh, then I'm the chairman of Sporthilfe, or president of Sporthilfe, which is a charity on the Swiss Olympics. We generate money that we can pay the money to the athletes. Then I started together with Swiss Re a charity for talents, young talents, 16 to 20 years old, under Swiss Ski. So these two, I would say, take up 5% of my time. And I have my own charity, which I bought a hotel now in Arosa. It takes also some time. But everywhere I'm always installing people, so I'm just I'm the coach, and this is what I like to do, and that's kind of my... And then I do as well, I love skiing, so I do some free time as well, but that's more or less my life.
I think very interesting for us to understand, and there seems to be maybe a more global trend that successful entrepreneurs become serial successful entrepreneurs. And you mentioned all these activities that you're pursuing. So what do you believe makes you successful in so many different areas, and what maybe allows you to become successful in that?
Also, the first thing is what I said before, being a generalist. I have seen so many things. I understand, without being high-nosed, I understand a lot of things out there. But I'm never somewhere really specialist. A little bit selling private equity, I'm definitely a specialist. But besides that, I wouldn't say I'm a specialist. The thing is, you get the right people and you coach them right, you oversee them, you fire them if they are not good, but it's a people's business. At the end, it's nothing else. Each of these businesses, I told you before, is when I took over Sporthilfe, this was a really terrible setup. They had 15, 17 employees. They were Beamte. They were just coming in at 9 and didn't know what they are doing. And so I changed the helmet. I got a new head there, and I told him, I'm your coach. You come to me and ask me. We want to double the budget. And you have freedom. Change your team. And from this team is one left, one person. So you change the helmet. He changes everything. He consults with me. I give him some feedbacks, but he runs the show. He does a great job, and that's what I do in each of these sub-segments. I guess that's what you have to do. And with a certain age, you have seen a lot, so you can be the right mentor to these people. But it's not that I run the show on all of these things, and then incentivize them right. That's another thing. Then it should work, and pick the right segments. But you can do everywhere something out of something. Yeah.
So, lastly, you previously talked also about acquiring a broad knowledge base. Could you elaborate on that idea and share with us how you learn broadly?
How to get the broad
knowledge, yeah.
Yeah, the thing is, at the end is be curious. I mean, read a lot, ask a lot. If you do an internship somewhere, I did an internship at Swiss Bank Corporation in New York. At this time, it was kind of unique that you could go abroad. Today, I guess everybody gets internships. If you don't come to, if I look at the CVs that come to Partners Group, I would have never been hired. I mean, even with my 6 months at Swiss Bank Corporation in New York, but I had a look and learn program there. I really took advantage of it. These 6 months, about 3 months, I had really to work. They put me into the credit department, and I had to write credit proposals, which was good. But the rest, I could go into bullion, trade finance, them. And these poor people there, I was not just sitting there. I was sucking everything out of them. I asked them, took them for lunch, asked them, and they were like, Urs Wietlisbach sits here and he wants to know everything. But that's what you should do. You're young, you're curious, you should ask. Asking is never a mistake. Maybe prepare before, read quickly. Today it's anyway easy. I mean, the old days I couldn't go up and look what trade finance is, but I maybe got my information through a library somewhere. So prepare yourself and then just be curious. And I'm interested in this thing. Yeah. If it helps me that I know how a barter, it helped me later on. I saw their barter deals. Barter means gold or oil for trucks, as an example. When I was covering Sweden at Swiss Bank, at Credit Suisse later on, I was really grateful that I have looked into this trade finance business. At least knew what these specialists were talking about. And I had kind of the oversight, and I knew what they talk about, and that's helpful.
And maybe beyond just being curious, do you have any habits or personality traits that helped you achieve what you achieved? I don't know, do you do something every morning that, is really helps you have a successful day?
Also, when I was younger, but I was much younger then, I was once kind of a, what do you call that, a beaten up kid or whatever. And I went then to the boarding school, and there I told myself, and I tell everybody, look in the window, go and look in the mirror in the morning and say, I'm the greatest, I'm the nicest, I'm the best looking, I'm the most intelligent, the most charming. And if you say this a week long, you believe in it. Seriously. But I guess at the end, you just need to like what you do, and you need to know what your strengths are, and you need to know what your weaknesses are, and work on your weaknesses, but you never get them away. I mean, I'm really bad in details. I'm really bad in writing. Still today, my emails are not the best emails in this world. I'm pretty good in presenting. I can get audience excited if I want. I can convince people. I'm really good in sales. And then work on. If you're very good in sales, don't go and be an analyst in analytics if you are really bad in analytics. So figure out where you're good and try to do this as good as possible.
So after almost 2 decades of facing very low interest rates, we were able to face a prolonged period of higher rates. What impact is that going to have on your business and on the global economy in general? And is there anything in particular that you're worried about?
Yeah, these low interest rates is anyway, you are all young, you only lived with low interest rates. That's not normal, believe me. That's not what it should be. Interest rates in Switzerland, I would say, should be around 3 to 5%. In the US dollar, 4 to 6. That's kind of what it should be. And it was just crazy behavior of national banks to keep them artificially low after the financial crisis, and then the in-depthness of all the different countries didn't allow them, especially also here in Europe, Italy, Greece, and so on, didn't allow them to really increase it. Otherwise, you have a disaster. Now, finally, inflation is here, which we predict the Partners Group since 5 years. Our portfolios are well prepared for it. We did several things. One is private equity usually you finance in floating rates. The leverage that you put on is 50% leverage or so. We have 85-90% through interest rate swapped into long-term interest rates, which actually is good for us. We love inflation now because if you are financed cheap and you can increase prices. The second thing that we did, over 80% of our companies are market leaders, and the same amount are in essential goods, and that's not by chance, that's by purpose over the last years build up, because if you're a market leader and you have essential goods, you have pricing power. So inflation is still not too good for you because it takes usually a quarter that you can adjust your pricing, but at least you are not, you come out of this crisis stronger than the rest, which is going to be good for Partners Group overall. What I'm most afraid is, I guess, a long-term stagflation would be pretty bad for the economy, for everybody. Inflation with no growth. So far, we still fare well. I mean, our companies' EBITDAs are up in the average, depending on which program, between 10 and 15%. So feel comfortable still in this environment. But there has been a complete, public markets were insane in terms of sentiment. And public markets today is 80% of the IPOs are loss-making companies. Doesn't make sense at all. All these Ubers and Rivians and Dash stores and crap and whatever, all this. And they had this insane 120 billion market cap. I mean, imagine Rivian, they not even had a truck sold yet. And they had a market cap of 120 billion, more than Ford, who builds thousands of companies. I mean, complete insane. And the company does 1.5 billion loss. But we have seen this. I mean, again, you're all too young, have seen it all in the internet bubble 2001. All these things were just collapsing, and it's going to happen this time as well. I mean, you're going to be many of these unicorns that you see out here are Munich without horns soon, so they're going to be gone. So, but it's good. I mean, it cleans out the market again. It's going to be real again. Now, for our business, as we do buyouts and not venture and so on, we have serious companies, and for us, as long as we don't have recession, which might come, but the recessions are usually here to stay for a year or so, and then usually it turns around. And then, in general, the economy is growing in the long run, and if you run companies well, then you're going to make money.
So we have two closing questions. One is going to be about macro and one about a general advice. So the macro question is, maybe you mentioned that 5 years ago you were paying attention to inflation. So what are the discussions that you're having now internally about the next big macro trends that you're trying to prepare for or to play?
You know, we have three big themes that we invest along these themes. One is digitalization, automation. We have a lot of whatever has to do with digitalization, making company better with digitalization, or company in digitalization. A lot of software digitalization company which we back. The second one is kind of new living, elderly people. And the third one is decarbonization. That's kind of these mega themes. And under this, we have then our investment, different sectors, industry sectors, which then come down to smaller themes. That's kind of the mega trends that we see. There where we see the opportunities. Yeah. The second question was, sorry.
Yeah, the last question is, if there was one skill that people should acquire, what should it be?
One skill?
Yeah.
Well, there are many, but as I said, be curious. I mean, get as much information during your time now, and I would say the first 4 or 5 years, don't think career in the first 5 years. Think about filling up your backpack. The career will come automatically afterwards, but if you just, think about salaries and I need to get from here to here, and I mean, the young people have it today. I see it when they come to us, they already want to be the CEO after three weeks. Feel uncomfortable that they have not had a promotion. Use the time. These are important times to fill your backpack. You will see it later on. But be curious. Fill it up as much as you can, and then work hard. And then after a while, it's not filling up, but using what you filled up in the field, and then you're going to be good. Then you could be exceptional compared to others. Then you have a great career automatically.
So thank you so much for answering our questions. I think we can open it to the floor. So please feel free to raise your hand, and then Leonard is going to give you the microphone to ask the question.
Thank you. So I have a question regarding impact investment. So your foundation also does this. And so I heard that there are different ratings for ESGs. And how do you rate the impact of your investment, and how do you decide? I didn't really understand this.
Yeah, I mean, we have a full on PG or the Blue Earth Capital Forum, PG Capital. You have kind of two teams there. One team is the investment team. They make sure that it's a good investment and that we have the right returns. They are like private equity people. And then you have under Mark Wilkinson, we have a full-fledged impact team. What they do is they have different parameters, how we are looking at each of the investments, how impactful it can be. you calculate. It depends on what you're doing. Is it impact for diversity? Is it impact for CO2? Is it whatever impact where it is? But you have then KPIs on this impact. You follow these KPIs. You report on them. An important part is also additionality. So, I mean, if you bring the fifth, I always bring this example. Some have heard it maybe already. Is like this on the Climate Growth Fund. We looked at a company, or the team looked at a company who is disrupting the e-scooter. They do e-scooter even better than all the e-scooters who stand out here, or the tiers and whatever. Yeah, they take market share away from something who is already big. So there's actually no impact. They just take market share away. They do certain things better, and for sure they will win some market share. So financially it will be an interesting thing, but it doesn't give more impact to the world. We have them already. So this additionality is also very important. But that's a whole matrix. I can't go into. I would take hours to explain all, but can bring it together with this Mark Wilkins. I can tell you exactly how we do it.
Hi, thank you so much for coming today. So you mentioned that you, at Partners Group, you run evergreen funds that invest for pensioners. Currently, we're facing one of the greatest energy crises of our lifetime, at least my lifetime. And we are also on the brink of a climate upheaval. We've seen a lot of talk about investing in energy infrastructure and energy security in Europe, in the world. What role do you see Partners Group will play in this kind of energy transition that is currently ongoing?
Yeah, and we have an infrastructure team. We manage close to 30 billion in there. And I would say 2/3 or even more, 70% of the investments are related to reduction of CO2. So we are very big in windmills. We have done wind in the North Sea, 2 wind parks, very big ones in Thailand, in Australia lately, many wind parks. We do solar, Japan solar. We have done the first big solar plant in Japan some years ago. So solar, wind, and then energy efficiency investments. Kleinberg's the one, this ETH who takes CO2 out. It's a very courageous investment of ours. A lot of things have to go right there that this works. So yeah, our infrastructure team is globally a big player. We are not just one player. We're one of the top globally, I guess, who invests everywhere. And that's also interesting for our investors, because this renewable industry is very much changing regionally. And if you're just a renewable investor in Europe, you're not going to bring the same returns as when you have global teams. Like, it was about 4 years ago, the Australian government has put out a new law that Australia has to have so and so much, I think 80% of all their energy by 2030, 80 or 85% has to be renewables. So they put a lot of money and subsidies in this. So if you do windmills in Australia, you just get 5% higher returns for sure than windmills, the same project than in Germany. So the ones who sit in Europe, they are not aware of this. But if you have a Sydney office and you see this, then that's why most of the wind project that we did were in Australia lately. That changes constantly.
Thank you very much. My question regards the global presence you mentioned that Partners Group has. Are there any or certain geographies that you believe to be especially interesting at this point in time, where the market may be mispricing political risk that we've mentioned before?
It very much depends on each sub-segment. I could maybe start where we are not investing as Partners Group, is the whole African continent so far. We are very cautious on China. We have always had an underweight, and we are underweighting it even more, even so we have a Shanghai office. We have never done anything in Russia. Even so, there are many oligarchs here in Switzerland. They walk into our doors and had these great ideas about, but it's just too much corruption going on, which we cannot tolerate. Special areas today, I think US is for buy and build in the healthcare sector. US is extremely interesting. We have done a lot in this. In almost each sub-segment, eye clinics, dermatology clinics, physio clinics, veterinary clinics, name it, almost everyone. It's an interesting, because they're extremely fragmented and it's really time to bring them together. Then the whole digitalization side, but you can't say that's by region, because these are global firms on the digitalization side. So can't give you exactly. We are also not. Yes, we sometimes have a view that we do less in China. That's a view that we take on we had a view that we never do anything in Russia, since ever. But the rest, we are really agnostic, because our industry teams are global teams. They sit in Mumbai, Shanghai, Singapore, Sydney, Denver. And if you work on deals, you also compare them risk-return wise. I'll explain this. We did a high discount. We like discounters as well. High discount shops, rollouts of discounters. So we had a deal in Europe, and we had a deal in India. Now we then finally decide on the Indian deal. But this deal had a much higher return expectation. But it has to have it as well, because you have higher risk. So it's this relative value. If the Indian deal would be a little bit higher than a German deal, it would do the German. So that's what you do when you have global teams. And that's what we measure them against.
Hi, Vitali Popushan with the MBA program. So I wanted to know what keeps you awake at night. Maybe you can name like top 3 focus areas where your firm can improve.
Yeah, I think it's the constant battle to keep the culture that we have built up. I mean, it has to do, first of all, the size. At 170 people or 200 people, I knew most of them, and most knew me and my co-founders and so on. At 1,700 people, it's kind of very difficult to keep the culture, especially when you have all the different cultures on top of it. If you have Mumbai, if you have China, if you have 320 people in Singapore, they are kind of different. That keeps us up mostly. To keep up the entrepreneurial spirit, as I explained, the first 150 people, they were at least partially. And today we cannot hire somebody and say, "Oh, come to us and you work for 50% less salary." Well, here have a few shares. The share prices, we are not tenfold the share price in the next 5 years. So it's a different way to lead the company today, and yeah, that's the disadvantage to start to be big. So suddenly you start to get some politicals. We always had open doors. We don't want to have political thing, but that's happening in bigger firms. That's the problem. Still a good firm. It still works well, but we constantly have to make sure that people get a reminder on our DNA, what we stand for, and so on.
I think we have time for one last closing question.
Just a question. If you started your career again, would you choose the same way?
Yeah.
Yeah. Also nothing else. You would study here in St. Gallen again?
I think I did pretty much everything right. It's like, yeah, I mean, if you would be today, it's different. I mean, today I would maybe do things different in today's environment. But at my time, I guess, yeah, I went this way, went to this university which I liked. I think it's a good university. It was small enough as well, and at least back at my time, there were about 2,000 students, not 8,000. I did the right internships. I got myself, what I told you before, I got my first 4-5 years, I got my backpack filled up with so broadly, from corporate finance to, and also different companies, Credit Suisse and Goldman. I guess that's one of the reasons that we were successful later on. And I would still start again a partners group. So.
Okay. And you still recommend the shares? I still can buy Partners Group?
Now you can buy it again. 1,600 I told all my friends not to buy, and everybody bought. And now at 800 Swiss franc I told everybody buy Partners Group, and nobody bought. So yeah, around 1,000 you can buy. It's not expensive, but it might go down to 600. So don't quote me, because I don't know about the sentiment of the market. I mean, that's the fun. You are all this investment club, right? Which I guess most of it you do in the public markets. And I always say, like, the public markets, to read the public markets is very difficult. It goes by sentiment. It just makes no sense. Public market makes no sense. And I always say the example of Partners Group. So we went public in 2006 at 63 Swiss franc. First opening was 80 Swiss franc. Great jump. Then we went to 180, completely overpriced at this time. In a very short period of time, we tripled the share price. And then comes the financial crisis. The stock goes down, 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 down. So at spring 2009, and we three founders, we started to buy back then constantly, always buying back. Nobody cares. We wanted to buy back to show the market it's cheap. Who cares? So 63 we came out. We turned. I think the lowest was somewhere around in spring 2009, in the midst of the recession, when suddenly the market decided now we go up. Nobody knew why. We were in the midst of recession. We were at 55, 56. We had 2.5 times higher earnings, not 30% higher earnings. 250% higher earnings than when we went public. And the market told us we are worth less. That's an insult, right? And at 1,600, when we trade at 48 times earnings, who would ever pay 48 times earnings for a partners group? We grow by 15% year over year. We double our assets, we double our earnings. So that's, yeah, if give us a 20 multiple, 18, 20, 48. And the same people who gave us a 48 gives us now, at least when we trade it down to 700 almost, gives us then a very low multiple. So it's all sentiment. It's not real. So, but your question, 1,000, we are not expensive. Okay, but we are also not cheap. It's right. I think our price, if I would have to say at the state where Partners Group price should be today, is 1,200, 1,100. That's kind of a fair price for the firm that we are. But I don't know what the market will, And we are a high beta stock, so if the stock markets go down, we go double as fast down. If the stock market goes up, we go double as fast up. That's just, it's not only us, it's the whole private equity industry, the Blackstone, KKR, EQT, all of them. It's like, but you have to live with it. And, yeah.
Well, Mr. Wietlisbach, thank you so much for your time, for staying for 2 days at the University of St. Gallen as well. I think the entire student body was very happy about that, but yeah, thank you once again.